Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, I want to go through some charts today. This is the Russell as of yesterday. You can see we made the ABCD. It was one standard deviation. Today we rallied up to the mean, which was also a 61% retracement of the high, and that's what we were looking at today. Now, what I'm going to do now, I'm going to do live trading on Friday. And I had an idea from one of our folks that comes every month, and that is it would really be nice if we could see what you were doing every day. So here's what I have proposed. These are the charts that I'm watching each day. You see it when I put it up here. There they are. These are the ones that I'm looking at right here. Okay, so what we're going to do is I'm going to show you. I sent these out last night at 2 o'clock in the morning. Just doesn't take very long. This was basically telling you that we made the exact 382 yesterday, perfect ABCD. This is a very bullish bias. That's what I was trying to point out. The next chart we looked at here was the S&P, and it says we should measure. You notice here that I drew this wrong. I'll show you in just a minute what the number was 6108, but that was the predicted high today in the S&P. It's 6108. Okay, the next one we're going to look at, you know what? Let's just do them one at a time. Okay, 6108, then all I have to do is to come up here and show you here on the S&P, and there was the high of the day, 61. High was 61.12, 61.13. We're 60.99 right now. Okay, so we'll go back and look at the next one because this is what I do each day. And they said, why don't you do it each day? And I'm going to start. Here's the natural gas. We had a beautiful pattern right here in natural gas. Wait till you see what happened to this one. Let's get back up here. We're going to go now. We're going to take a look at the natural gas, which is right here. And natural gas blasted through everything. You can see here. Natural gas, this is where we sold it right here, right there at 62, and got blown out right away with 3 points. And then the market later in the day, as you can see, made a beautiful A, B, C, D pattern right here, just as nice as can be. You can see it there. It is at 1388. And right now what it's doing, if you have an interest, it just made a 382 retracement right here in that one. Okay, now we'll move that out of the way. And I want to get these out of the way because it's important to see that when these things work and when they don't work. So the next one we're going to look at is the soybean meal. As you can see, we're looking to buy it down here at 290. I said when we broke this low, anything around that 293, 292, you want to cover the short because we sold it up here at 314. Okay, that makes it a $2,000 winner, which makes it a really good trade. And if we go back and take a look at this on the soybean meal, you'll see here's where we are right now. We're within you can see within $1 of the exact number right in here. So we're basically out of that, and I'd be a buyer at 290 with a stop at 295. 285. Okay, now what we're going to do is take a look at the next one, and here is the silver. Now, silver we thought was going to get up to this level right in here and then have a sell-off. So we're going to see how that worked on silver. So we're going to come up here, back to see where we are, get the soybean meal out of the way, bring silver up, and you'll see here on silver, what did I do wrong here? Hold on a second here. Get this up here. I'm not going to do this each day. I'm just showing you what I'm planning on doing. There was the move. Here's the move down in silver. Stopped exactly at the 382 of the low that we had right down here. That was would have been a nice move for some nice time. And now we're going to go back, get this out of the way, and get this out of the way. I'll do the euro in just a second. Let's do bonds next, folks. So get up. This is my trade of the day. This is how exciting this could be. you. Let's see if we can get the bonds next. Well, this was basically saying that the soybeans were heading lower, and that's exactly what's been happening. We had a meal on, so we didn't really have anything other than that. And the next one was, this was the euro. I'll cover this. I want to show you the euro because this has a very, very bullish bias, and I wanted to show you why. Since we'll do that, we'll do it right now. We'll come up here, and we're going to take a look at the euro, and here it was. There was a low last night right there, early in the morning. You can see it right there. 3082, it moves $700 straight up. Now, this might be a 3-drive to a top pattern, folks, because as you can see here, there's drive 1, there's drive 2, and there's drive 3. There's a possibility of that. But the original pattern here worked for well over $800, and you're only risking $300 to make $800. You know, that's what you're really trying to do. So the next one we're going to take a look at, hold on, we did that one. Get back here, and I think this is the next one, wasn't it? This was the soybeans. That's already done. Doesn't take very long to go through these. This is the euro. Just did that one. And I just do the next one, which was, here's my favorite. I really like this one, folks. You got a 382 setting here. Just absolutely perfect, right? Except for one thing. There was a report out. A stop was right above here. I said you're only risking 8 points, which is roughly $300. And the fact is it hit this, backed off about 12 ticks, and then the report came out, and boom, you're out of it in a matter of a millisecond. Because if you looked at this on the chart, you'll see here's where we were. Last night, there was the 382 right here. You can see market backed off right here. There was about 12 ticks, and then the report, it was lower when the report came out, and boom, your stop was hit right there. Now, one of the things we always teach, if you're interested in it, and that is once the market takes off, you look for a 382 retracement. Folks, there's no 382 retracement here. This thing just took off, and there was nothing you can do about it. We were history when we went above this level right here, and it never gave any sign of any action. Okay, let me get the last one up here. I don't usually send out 10 or 11 a day, but last night there were just so many things. Oh, this is the really nice one. This is the cattle. You can see here we want to be buying cattle at 618 right here at the 190, 195 level. Okay, and if you take a look at this and today in the cattle, a perfect example. Let's just, all I got to do is get it up here and get these things straightened out so I can see them all together. And the cattle is right here. We'll get it up here. Here it is right here. We'll move it over. There's our number right here. It didn't hit our number, so our first thing is to buy the first retracement. So you just go down, and there it is. There's the opening. Pulls back. It misses our buy here by $50, $200, and then it pulls back and comes down to here, and then has a huge move. It rallies 2 handles, folks. That's an $800 move in cattle. And now you can see what's happening. Where is it coming back to? Well, it's making a 50% retracement here now, but that's what we're trying to do, is to be able to get these in here and get really low risk trades so that you can see them unfold. And if you're going to spend 3 hours with me twice a month, you should be able to. I'll send these out to everybody that's going to the show on Fridays, second and fourth Fridays of the month. That'd be the 14th and the 28th. You'll get these every day, as long as you're a subscriber. Every day, whatever I'm looking at, all right? One more and we'll be back and talk about some other things that need to be talked about.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The events for this month are February 14th and 21st, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, folks, continuing on these charts that I look at each day, this is the crude oil. As you can see, we had perfect harmony going up. You can see, and we have perfect harmony coming down. That would have come in at 69.58. The low was 70.20. We took out the low here. The low was 70.20, and the market did not reach our level. So we use the same rule that we used with that, and we're going to do it again. And I want to get this last one in. Let's just do this right now. There's the crude oil. That's live cattle. Crude oil is, here it is, right here is the crude oil. Now there's crude oil. And as you can see here, this is our first 382 retracement. The reason why you use this one to that low is look how long. That took a whole hour, folks. That took a whole hour. That means it was stronger than this one. This one took about an hour, but this was the lower level. There was your 382, and that would have made $500, and I think it just made another 382 just now. Yeah, we just did. There it is again. Well, started anyway. So that's how you try to control the risk, and that's what you're looking for when you're trying to line these things up. And I believe we had one more to look at, and that one is the gold, and we said that one was going higher. We said that would go higher, and it did. It went up to the 786 retracement of that move at 29.51, and it's backed off a little bit, but not too much. Let's get this back up here, and I've got some things. We'll try to get all these straightened out and see what we got moving in here. And look at this natural gas, folks. If you'd have done that trade, you'd have made a quick $500 on that one. There's your 382. Let's try that again, folks. That is a $700 win in the natural gas right there. If you'd have been able to put that right on, and the S&P's working okay. Now we have some questions about the ABCDs that were in the Gartley book. Okay, on page 222 of that book. Actually, page 249, he talked about parallel channels. You've seen them, ABCD. And he was the first one ever to put those in print. That was in 1937. The book cost $1,500 in 1937. That was a cost of 3 Ford automobiles. We were in the depths of a depression, and that made it pretty tough to do anything. However, The book was only sold to 12 people. I had one of the original copies. Don Mack gave it to me as a friend because I did something nice for his family. And I didn't do anything with the book for 3 or 4 years until 74 when I started to say, better look at this stuff. And then I asked Don about, I was excited about it because I could see, ABCDs working everywhere. And I said, Don, how come no one's ever done anything with this? He said, Larry, 2 people tried to do ABCD patterns, and they sold trading systems. So the first man was Franklin Tubbs. He was in the 1950s. Now, Gartley didn't die until 1969. And he died of cancer, throat cancer. He was an avid smoker. And he was one of the deans of Wall Street. He was the one that put out the best data anybody had during that time. And he was going through a divorce, so the things was tied up in courts. Nobody ever wanted to redo the book or anything like that. And I was at Drexel in 77, and I found out that the book was probably going to be able to be reprinted. And so I contacted, what was his name? Jones, what was his name? Billy Jones, up at the Pomeroy, Washington, again, publisher, publishing company. And he reprinted the whole book, and it sells for like $180 with all the charts. My God, it's worth a fortune. And that's what it. The second guy that tried to put a system together was Charles Lindsay. He lived in Westlake Village, where I lived. And he and Larry Williams, boy, they don't like each other now, but during that time, they did a thing called the Trident Trading Method, and it was so popular. They sold a lot of it was $5,000, folks, is what it cost for the ABCD system. And then they had a fax program that if you got on the fax, they would send you the patterns and do it. The problem was it had all of these things that were mechanically going wrong with it, and it didn't. And they had a big falling out each other, and so that was the name of what was going on with that. Okay, so that was the end of it. Nobody ever did anything. No one's ever said anything. I've never sold it as a trading system. I just show it as ABCD. I give Gartley all the possible help that I can, and that's why I do it, because the darn thing works. It doesn't work all the time, but guess what, boys and girls? Not everything else does either. Now, hopefully, we're going to have Mike Moore as our guest, but I want to bring up a couple of charts. People asked it out today because the earnings came out on one of the stocks. Haven't looked at this in a very long time, but it's right up our alley because it's Deere, the manufacturer of farm equipment. Let's get this up here. Where are you, Deere? A, B, C, D, E, E. There he starts with a D. There it is right there. Now what I'm going to do is get the daily up. The earnings came out, and it was very bad. So we'll get up here, and you can say, well, it's coming down pretty good here today. Now there's the daily chart. You can see the earnings came out, and it's dropped. Well, look how quickly it rallied back, folks. My goodness. There's a beautiful, look at this. This is an ABCD pattern right here today. There was the earnings came out. The market opened here. I know it did because I was watching it. Watch. Oh, hopefully this will refresh. Just give me a second. Yeah, there's where it opened. Look, rallied $20. And how did it do it? Oh my gosh, look at this. It's a perfect ABCD. And what did it do? Shut the front door and raise the rent. My goodness. What is that number right there? It stops right at the 30 and $17 higher with really bad news. Wow. Maybe this stuff does work. Better start using it. Anyway, that's what happened to Deere. Folks, well, never mind. Okay, the next one we're going to take a look at is the war company. Let's get this up here 1 second. LM and TLM. There it is right here. There's where we go. Lockheed Martin. Okay, now here's the high in Lockheed Martin. This was when it made the big ABCD up here at 620. It's now trading at a 50% discount. I bring to this your attention because when market starts to break, if you look for this little puppy right there, okay, that's a 382 retracement. It's a 1, 2, 3, 4-day rally. This might happen in our stock market someday, but probably not in my lifetime. It actually misses the 50% by, well, you're talking $10 in a $500 stock. And the next time it goes from the high, it goes exactly to the 382. Now, this is probably giving you some indication that there's going to be a low down in this area here at around 392. And the reason why you say that, if you go to what Gartley taught, he said these parallel channels work a lot of the time, and you'll see it's going to bang on the door right down here, $50 lower at 396. So what we're going to do now is we're going to put our limit minder in, and someday it might hit there, and we'll take a look and see what actually happens with that. Now, I've had a request about Tesla because we had a big bottom forming in Tesla. This is going to be quick, so I might be off the air, but you can pay attention while I'm putting it up here. Hold on a second. Where is the Tesla? Remember, on the daily, we were right down there at the bottom. And by golly, look at it. There it is. It's rallying. 2 days ago it started. That's when the bottom was made in shucks. That's where the bottom was made in Tesla, and at 24, and now we're at 50. It's rallied $25. So let's take a break. We'll be right back with Mike Moore of Moor Analytics.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, I want to switch over because I see there's having tremendous volatility here in these markets. I wanted to go over, this is the S&P. I wanted to bring this up to your attention here because this is the range we had. We got up here and look, we dropped from that level here, folks. We dropped 25 handles, and you'll see this is a very strong trending market, right? So what is it only going to go to? Probably exactly 382, and there it goes right there, exactly to the 382, and then it stopped. So it's very helpful to know what these are, and that's why it's fun to watch them unfold as we look at them. Okay, now let's move on to a couple other things. I want to go through a couple other grains here, and then also the foreign currencies. Mike's going to be tied up. Oh, wait a minute. I think he might be with us. Let's just check and see if we are. Mike is in the house. Thank you, Mike. How you doing, my friend?
Good. How you doing today, Larry? Thanks for having me.
Just living the dream, my friend. So we're ready. Just fire away.
Sounds good. Let me share a screen. Can you see my screen?
Yep, you're coming up great.
Okay, there's contact info in case anybody needs it. All right, you want to look at crude first?
Yes, sir. I'd like to do crude, heating oil, and gasoline, all three of them.
Okay.
In that order.
So the crude oil, yesterday we left a minor bearish reversal above, which I'd warned about in the morning. So I said right in here yesterday, we left a minor bearish reversal above. We'd come off $2.33 from the 72.55 high, or the open there, and we rolled over. However, I warned that we're likely in the last stretch of the move down from 79.39 with areas of possible exhaustion at 70.26 to 69.55 and lower. And we're holding this 70.26 right now with a 70.23 low and bouncing a bit. We've also broken back above these lows. So this could be the start of a bullish correction against this move down. This could be a whippy projection that could last for days/weeks. If we roll back over and take out these lows, we might test these other levels of exhaustion further below. You want to jump to the RBOB?
Yes, sir. Gasoline and then heating oil, if you don't mind.
Okay, so the unleaded gasoline. We were bullish for the past number of days until we fell back down through this line right here. So trade back below 213.59. I said now warrants decent pressure. We had seen 8.12 cents of that coming into this morning, and then we bounced back up. If we were to trade back above that line decently, that's going to warrant a decent strength. That's going to come in at 213.19, minus 1.4 per hour, starting at 1 o'clock p.m. Eastern Standard Time. We failed down below this formation right here, which is going to come in at 204.87. 204.88 to 204.87. That will project this downward 10 cents minimum, 17 cents plus maximum. And if you break below there decently and back up through it decently, I look for decent short cover to come in. And the heating oil come off also overnight. We held exhaustion above at 250.25 to 51.67. With a 251.79 high, and we rolled over 11.09 cents into this morning. That was holding this exhaustion right here. We held it once, and then a second time, and then started to roll over. So this could be the beginning of a new bearish structure. We'll have to see. Now we bounced off this line below. If we take out that line below, that's going to open up the downside even more. That's going to come in at 240.16. Bear with me a second. Plus 2 per hour, starting at 1 o'clock p.m. Eastern Standard Time. Likewise, if we break below there decently and back up through it decently, look for decent short covering to come in. You want to look at the Brent and gas oil, or would you rather look at the natural gas?
Let's do the regular heating oil, and then we'll look at the natural gas, because that's had one heck of a move today, and we'd like to see what you're seeing.
Sounds good. So the Brent turned bearish yesterday also on the open. We left I'd warned of leaving a minor bearish reversal above. So the trade below 76.29, I said warns of pressure. That was the failure back below this line right here. We'd seen 223 of that coming into this morning and maybe a little bit more in here. We also broke below this formation, which came in at 75.05, which projects this downward $2.40 minimum, $8.20 plus maximum. So we've only broken down to 74.06 before short covering back up here. So this is either going to be an ideal place to short, or if we break back above this line, I expect strength to come in for days, possibly a run back up for these highs up in here. Gas oil. We held exhaustion above at 732.50 with a 731 high and rolled over 31.25 coming into today, and then just bounced off of this formation, which we had gotten bullish above last week for the run up in here. You take out that formation below, that's going to warn of continued pressure. That's going to come in at 700.25 to 699.5. If we break below there, that'll warn of decent pressure again. Okay, and the natural gas. We held exhaustion at 296.60 to 520 with a 299 low and bounced 719 ticks into a bullish trend. We took out final possible exhaustion yesterday at 355.90 to 360.90, which opens up a run, which I said this morning opens us up for a run toward 377.80, which
was the high.
Is that the high? Yeah, 378.60.
Yeah, well,
so we took that out, and then we started to roll back over. We also had a fade suggestion on that right here, so that's why we're seeing some of the pressure. We broke above there and fell back down through it, which is a short right now. If we were to come back off and take out this formation right here, that's going to come in at 355 plus 2.7 per hour starting at 1 o'clock p.m. Eastern Standard Time. That will warrant decent pressure for at least 200 ticks to the downside. If we were to break below there decently and back up through it decently, I would look for decent short cover.
That's a great job on that high. My goodness, that's spot on.
Thank you. Would you like to take a look at the S&P or?
Yeah, let's do the S&P and the gold, and then we'll be right back with Mike Moore and Moor Analytics, folks. Stay with us.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
We're back, folks, with Mike Moore of Moor Analytics. Please continue, Michael.
Thank you, Larry. So this is the S&P. We've really been kind of grinding sideways here for a period of time. Just some overall background. We've been bullish since 3502. We've seen 2,676.75 handles to the upside. A lot of other calls, bullish calls in here along the way. The one that we've been updating more recently is a projection from 4832.75, which I said projected this upward. No, excuse me. Not that one. The break above 5678.50, which projects this upward 240 minimum, 570 plus maximum. So we're 500.25 into that. And then the current formation we're looking at right here is this one right above, which comes in at 61.07 even, minus 17 per hour, starting at 1:30 p.m. Eastern Standard Time. And a decent break above there will project this upward 107 minimum, 205 plus maximum. We break above there decently and back down through it decently. I would look for decent pressure, likely for days, possibly weeks.
Okay.
Yep. Take a look at gold.
Yes, sir. A lot of people interested in that one. My goodness.
It just keeps rip-roaring here.
Yep, it sure does.
I did turn bearish yesterday, though, so let's see here.
So did I.
Unfortunately,
I wasn't bearish very long.
Yeah, well, I only gave you a little bit. Just as an overall, I've been updating this since you've had me on the beginning of the show, but we've been bullish since August 16, 2018, from the break above 1183, and we've gone on to attain 1,784.8 per ounce since then. A lot of other bull calls in here. On previous shows, I've been updating this macro projection. Solid trade above 2148.40 projects this upward 151 minimum, 954 plus maximum. We are now 820.1 into that projection. All those are on hold. As I warned, we may be in the last stretch up from 1618.30 low in November of 2022, with possible exhaustion at 2962.70 to 2993.60. And we held that right here, this red line, held that with a 2968.50 high. and rolled over 63.5. Also, the trade below 29.23, I said projected this downward 23 minimum, 49 plus maximum. We attained 36.5 of that before short covering off the low. That was a very steep formation right in here. So we broke it here, saw a piece, and then ran up here. And even though we're above where entry would be for short, we still have not violated this line yet. This was not enough for a violation. So technically, it's still bearish because we're below here. If we take it out decently on the upside, and that'll come in at 29.45.30 plus 6.5 per hour starting at 1:20 p.m. Eastern Standard Time. Decent break above there will likely take it right through these highs and test up in this main exhaustion area. This main exhaustion area is from 29.6270 to 29.9360. Now, if we roll back over and we take out this formation below, that's also going to project this lower. That's going to come in at 29.0570 plus 3.5 per hour, starting at 1:20 p.m. Eastern Standard Time. And a decent break below there will project this downward 49 minimum, 87 plus maximum. Likewise, that would be a fade if we break below there, decently back up through.
Do you follow the open interest and volume and stuff on that kind of thing, or do you just look at the charts?
I know there's a lot of value to it. I just don't follow it. I know.
Okay. Well, I've noticed, I've been watching the last several weeks since January the 26th, and that is the open interest has been dropping and volume has been dropping. That's short covering. That's not new people coming into the market. That can last a long time, but that's not the way you want to see a market. You want new buyers coming in, and they're not coming in. Open interest is dropping. And that's not a good, it used to be. Hey, and these days, maybe nothing works anymore, but that's what I'm looking at. But it keeps going higher, so I stand aside, taking nibbles at it here and there. Please continue, my friend.
No, that's good wisdom. I just, there's a lot of very valuable things, and I know that that's one of the valuable things out there. I can only pay attention to so many things at once.
Yeah, understood.
Let's take a look at the, so we'll take a look at Bitcoin.
Yes, sir.
Now, Bitcoin, as you know, we've been bullish overall from the break above 16,275. We've seen 92,685 per coin. On the upside, a lot of other bullish calls in here. Those are all off hold. More recently, the trade back above 94,495 has brought in 8,380 of the strength warned about. That was the break back above this line right here, shot up, and now we've just been in this grinding downward motion here. I do think that this is going to resolve itself by heading higher. If we take out this formation right here, which is going to come in at 97,923 minus 26 per hour starting at 1 o'clock p.m. Eastern Standard Time, that'll warrant a decent strength. That is a sort of just okay formation, so might use half the normal size on that. This formation right below here, if we were to break below there decently, back up through it decently, that would warrant a decent short covering. That's going to come in at 94,162 minus 18 per hour starting at 1 o'clock p.m. If we were to break it down below this formation right here, that's going to come in at 92,530 plus 3 per hour starting at 1 o'clock p.m. Eastern Standard Time. That will project this downward 11,000 minimum, 19,000 plus maximum, which would be a fairly sizable move for a market which has a market cap right now 95,980.
Wow.
Let me just take a look at one other thing here real quick. All right. You have any questions?
No, it's really great. You know, you did a great job. But thanks about that high in the natural gas. Boy, that was absolutely spot on. We're $17 lower than that right now. So people might want to keep an eye on that one. Hey, thanks for joining us, Mike. We'll have you on in a couple of weeks. And anytime you see something that really is important, you know, give me a jingle. We'll have you on anytime because you're one of our preferred guests. And we like to hear what you're saying, especially about energies and gold and the Bitcoin, because very few people follow it as closely as you do. So thanks again. We certainly appreciate it.
Thank you kindly. I appreciate it.
Mike, tell the folks how to reach you. That'd be the best way to do it, if you could.
Hold that right back over on here. Sorry, let me pull it back up.
We'll leave it up here while we come up for the next break so that people can see it. Get your contact information. There it is, your phone number, 646-708-4612, Moor Analysis at gmail.com. Moor Analytics. M-O-O-R. Mike, thanks again, buddy, and we'll have you on again soon, okay?
Thank you, sir. You have a great
Thank
day.
you. Mike Moore, folks. Be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Oh dear, hold on. I might have to sneeze here at the old Palo Verdes. Oh dear. Hold on. Sorry about that. I want to talk here about the different market. This is the S&P. Looking at this on that long-term hourly, you already seen that we've completed the pattern that we were looking at up here. However, with the Dow Jones, you can see it's much weaker from the last 7 days. We just went above the 382 here today. This morning we hit it and then backed off again. That tells us there's another smaller ABCD coming in right here at 46.88. We're not very far from there. This has been coming down. Wow. Sorry, folks. I am having a very difficult time breathing. Let's anyway, that's what we're watching. Let me draw this in, and then we're going to end the show here. Tomorrow, we've got the live trading. Hope you can join us. You'll get 30 days of all these charts that I'm doing each day. I'll send that somewhere between 2 and 10 each day. You'll know what to do with them because we talk about it every day here. And anyway, there's your ABCD coming in here. Compliments of Mr. Gartley, and that'll take you up to 47.31, just probably taking these highs out right here. That's what I'm expecting it to do, not getting any higher than right up in here. So that's what we're watching here today. The other one is, folks, don't be, just because the bonds had this rally, that's just a little bit of emotionalism, the market being extremely oversold. This is a very bearish market, folks. That is a bearish market. You can see from the high, wow, from way back here, all we were able to do is we're trading just above the 382. We did this. We've rallied up almost 2 handles here, but don't forget, folks, we came down 4. And so a little more came down, let me 16 to, we came down 3, and we've rallied back 2. So we're right at the 382 retracement here right now. And this is not bullish. If you look at this on the weekly, any way you want to look at it, we'll see. Anyway, this is what we're seeing here. And well, there was your 382 right there. Okay, we'll see you on the flip side tomorrow, boys and girls.